Hi everyone, today was budget day. Earlier today, India's Finance Minister Nirmala Sitharaman presented the 2021 Union Budget in the Parliament. Millions of us Indians were tuned in and were analysing every word she said as she spoke about tax reforms, growing rural incomes, affordable housing, Vikas, Vishwas, and many other issues and opportunities that the current government sees in the functioning of a vibrant and accelerating India. In this video, we look at the key highlights of the 2021 Union Budget, how it affects the life of a regular everyday Indian like you and me, and what are the opportunities in the budget for you. Before we get started, do subscribe to the ETMONEY channel and hit the bell icon for regular updates. It is only fair that we start this analysis with the one word that the Finance Minister used 132 times in a speech, and that word was tax. Currently, there are more than 100 tax exemptions and tax deductions of different kinds in the Income Tax Act. Some of the popular ones are Section 80C, 80D, Section 24, Section 10, etc., which we have been using for many years now on account of PPF, life insurance, house rent allowance, and many more. In this budget, a new personal income tax regime was introduced for people who agreed to forego these deductions and exemptions. Under this new structure, for individuals who have a taxable income of between 5 to 7.5 lakhs, pay a tax of 10%, which was earlier 20%. Likewise, for people in the income tax slab between 7.5 to 10 lakhs, there is a visible tax saving of 5%, a tax saving of 10% in the 10 to 12.5 lakh category, and a 5% reduction in tax rate in the 12.5 to 15 lakh category. Our view is that there is clearly more money in the hands of people, especially for ones in the lower income strata of the society here. I say so because households that have low incomes also have low savings, which really doesn't allow them to invest in tax saving instruments. This new tax regime is a very formidable option for them to save taxes. In fact, let's see how much we can save here with a simple example. Let's say your annual taxable income is rupees 8 lakhs. Now, as per the existing formula, your taxes would have been calculated at rupees 75,400 rupees, assuming you did not opt for any deductions and exemptions. But under this new tax regime, the taxes on your 8 lakhs income will be much lower at just 46,800 rupees. This gives you a direct savings on your taxes to the tune of 28,600 rupees. Similarly, for someone earning an annual income of 15 lakh rupees, the saving in taxes is about 78,000 rupees. Another category of earners who should benefit from this new structure are self-employed people who anyways don't utilize many of the deductions provided under the Income Tax Act. For them, it is a direct saving in taxes on account of the lowered slabs. But remember, whether to choose this new tax structure without deductions and exemptions, or to continue in your existing tax structure with deductions and exemptions, is a decision that you need to take. To help you with the math around it, look out for tax calculation tools that we'll introduce very soon on ETMONEY. I'll definitely link it in the description below or pin it to the comments for your benefit. Another positive announcement by the Finance Minister has been the hiking of the deposit insurance cover from the existing 1 lakh rupees to 5 lakh rupees. A deposit insurance cover is a guarantee made by the Reserve Bank of India for the deposits you keep in your savings, fixed deposits or current accounts. This benefit is made available to all customers of banks absolutely free of cost. This hike to rupees 5 lakhs is a very welcome move at a time when the confidence in the banking sector was shaken down due to the recent PMC bank scam, which caused panic and distress among many depositors. Hiking the deposit insurance cover will certainly allay the fears of some people in the country's all-crucial banking system. The abolition of the dividend distribution tax was the other big announcement in today's budget. The intent of this move seems to be in making India an attractive investment destination for foreign companies and in also freeing up more capital for companies to reinvest back into expansion. Currently, the government taxes companies for dividend paid at 20.35%. As per the budget, this tax will become zero and the dividends paid will now be taxed at the hands of the recipients. A move like this is generally expected to spruce up the stock markets. Companies like TCS, Infosys, Indian Oil, HDFC Bank, Reliance Industries are among India's largest dividend payers. On ETMONEY, especially in the mutual fund side of things, it will be interesting to see the impact of this move on a class of funds called the dividend yield funds. Some AMCs offering such funds include Templeton India, ICICI Prudential and Aditya Birla Sun Life. The funds invest large part of their portfolio in companies which have high dividend yields. Some companies that come to my mind are NALCO, which is National Aluminium Company, Coal India, Hindustan Zinc, Indian Oil Corporation, etc. In addition to these big common man announcements, here are some others which will certainly impact on how the stock market behaves over the next few weeks. 1. The disinvestment of LIC or Life Insurance Corporation of India, which is a mammoth announcement. This is likely to be India's biggest IPO ever and will see strong retail and institutional participation. 2. The budget continued on the Narendra Modi government's mission of doubling farm and rural incomes in a slew of initiatives. These are likely to have a very positive impact on businesses and companies that provide products and services for rural consumption. And finally, the government reiterated its continued program on building big infrastructure around roads, rails, ports, renewable energy, power and logistics with a high expenditure allocation and many concessions. These initiatives and public spending programs will have a positive bearing on India's macro picture and form the platform for high nominal growth, which has been estimated at 10% for the coming financial year. Overall, the budget did a fine job of balancing the country's quest for growth, creation of employment opportunities and social welfare while factoring the needs of the common man. I hope you found this video useful and enjoyed watching it as much as I enjoyed bringing it to you. Do tap on that like button and share it with your friends, and don't forget to check out the ETMoney blog, where we shall bring more information and analysis on the budget and many such events that shape our financial lives. Happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.